Hi, this is P R Sundar. Welcome to this special episode where I'm going to discuss about my TCS strategy. The first thing is that I decided not to trade in stocks and not to trade in Bank Nifty and not to trade in Fin Nifty. So from this financial year, I just decided to trade only in Nifty. But sometimes, we trade only in Nifty. So what is there to share in the YouTube? At least to give some sharing, some educational purpose, some strategies. So I thought here and there I will do one or two stocks, but that will be very, very minimal quantity. So I told you I'll be taking some position in TCS, and what happened yesterday, I took a trade in TCS and I told you that I'm going to take this trade before the results. So the results were set to declare yesterday after the market hours. So just ahead of the results, I've taken the position. This trade is called earnings trade. So the following day, you better get out of the market. So it's just only one day trade. After taking the trade, I actually posted it in my social media, that's at Twitter. And look here, took some positions in TCS ahead of results with unlimited risk on the higher side. Why unlimited on the higher side? You see what I did. I bought 10 lots of 3200 call option. I sold 30 lots 3 times 3300 call option. So 10 lots buy, 30 lots sold. And then 3400 call option, I just bought only 10 lots. But logically speaking, I should have bought 20 lots. So that 30 lots buy, 30 lots sell, so that your risk will be limited on both the sides. But because I have taken only 20 lots buy, whereas 30 lots sell, in case if TCS has gone up 10%, 20% like that, then there will be unlimited risk for me. So for people who don't understand, maybe I can show you through the payoff chart. So here is what the payoff chart looks. When the market falls, no downside risk. But if the TCS shoots up, then there will be unlimited loss. But we all know that IT companies are not supposed to declare good results because many mid-cap banks are falling in US. So they are going through all kinds of problems. Nifty, trading about 15-20% higher than the 52-week low, while IT stocks are trading closer to 52-week low. So they are looking very bearish. So normally I am a guy who take a little bit of directional view, and not complete directional view, but a little bit. So I was little bit bearish. That's why I thought, why should I spend so much money for hedging? So instead of 20 lots buy, I just bought only 10 lots. And what has happened today at the end of the trading session? So this is the situation. There is a loss of 50,000 rupees in the buy option, and there is a profit of 93,000 in the sell option. And for the hedge buy, there's a loss of 10,000. So there is a net profit of 32,000 rupees. And the total margin deployed is roughly about 13 lakh rupees. I deployed about 13 lakh rupees margin, and I got a profit of about 32,000, which is roughly about 2.5%. In fact, a day before yesterday in the YouTube, I just mentioned, so I'm planning to take this trade. But that time I told you 1 buy, 3 sell, 2 buy is a complete hedging. So assume that I would have done the complete hedging. What would have happened? For complete hedging, so 10 lots buy, 30 lots sell. So here I should buy 20 lots. So if you buy 20 lots, then it become a complete 30 lots sell, 30 lots buy. So you can see downside also risk is limited, upside also risk is limited. But although upside risk is limited, look at the loss, 1,82,000 rupees. Yeah, but that is better than taking unlimited risk. So assume that I have done this one. Now look at my profit. It was not 32,000, it's only 22,000. Because there is an additional 10,000 rupees loss in the buy side. But it may look like, you are getting less return. Actually, that is not so. You know why? When you buy the hedging, the margin goes down. Earlier, my margin was 13 lakh rupees and I got 32,000 profit. It's 2.5%. But now you see when you do the complete hedging, the margin comes down to 7 lakh rupees. But there is a profit of 22,000 rupees. So this actually translates into 3% return on investment, not 2.5%. In the complete hedging, what is the advantage? One thing, the upside risk is also limited. Number two, I would have got better return on investment. So I used to say, just for fun, there are two groups of people in our country. One group of people walk like a dog and other group of people walk with the dog. So this is just for fun. Just to say, there are two groups of people. One group of people, who are suffering in the life, so they walk like a dog. Other group of people, very rich people, they walk with the dog. So the same way in stock market also, among the traders, there are two groups of people. People with a very, very small capital, they are trying to get some good return for their investment. And another set of people with a large capital, they don't know how to deploy. So I was just trying a system, so I had to sell a 2 lakh quantity and there were no buyer there. So much of quantity, even in Nifty, forget about the stocks. The people who have smaller capital, so it makes sense for them to go for complete hedging. But whereas in my case, I have a lot of capital to deploy, don't know where to deploy. Even if you don't do hedging, the margin is higher, we may get less rate of return, but absolute return will be better. So it all, the one formula does not fit everyone. So it depends whether you have a large capital, don't know where to deploy, or whether you have a small capital looking for a better return. Anyway, after a long time, I've taken an earnings trade. So earnings trade means, the trade is taken just before the results, and after the results, the next day, profit or loss, exit. So we don't want to take any view of the market for the next few days. This trade has given a decent return, if not a very good return. And as expected, TCS has actually fallen today. So hope you enjoyed watching this video. Thank you for watching.